Good morning, everyone. Hope you guys are doing well. Today is Thursday, September the 25th. Overall markets, you can see, are pulling back. SPY and Qs, we're breaking underneath key levels. SPY, we're getting underneath that that FOMC high. So that's a very key level for the overall markets. We should see some now a little bit more downside just because we're underneath your previous day lows, higher time frames starting to slip here as well. We'll talk about the levels and what we're looking at coming into today and looking to see if we're going to buy the dip or if we should hold off and wait for really now it's going to be that FOMC low. So we'll head on to the charts. There's a lot of things to kind of go over today. We do have some red folder news here as well that I'll pull up in a second. Before we do that, what's up, everyone? Good morning. Hope you guys are doing well. Good morning, B Roots, Jeff, Victor, Ken, Monty, Robert, Jen, Under, Co, Sinna, Olger. Good morning, Vade, Eileen, 50, Wayne, Joseph. Good morning, everyone. What's up, Robert, SL, Alex, Deuce, I am, Alex, Majid, Willie, True, Hartig, Daniel, Darth, Nikki, Miss Reggie, Telmo, Juan, Jatin, Vic, Norwin. Yeah. What's up, everyone? Hope you guys are doing well. Before we get started, if you guys enjoy these, appreciate if you guys drop me a like. If you guys haven't joined the daily watch list, that's in the description below. And also, we do have the event coming up this weekend as well. You guys should have gotten some emails. You guys can sign up for that. That is going to be on the 28th. So, before we get into the charts, let's go over the red folder news that we have coming into today. We do have some GDP numbers along with unemployment that is going to be at 8:30 a.m. Eastern Standard Time. So we'll just go over some names here for the first 30 minutes, the indices along with the tech, and then we will wait for this 8:30 red folder news to drop. It probably won't affect the market as much since now we're having a bigger push towards the downside. So that's for the red folder news today, and then tomorrow we do have core PC at 8:30, and then we also have consumer sentiment as well. So let's now head on to the major indices and we will head on to the tech names after. Okay, so first things first, key levels that we have marked out, at least coming into yesterday, was our 6730. This is the level that we had to get above here on SPY if you wanted to see a pushback towards the upside. Ended up having a nice sharp reaction right off the bat. And you can see now we broke underneath your previous lows on Tuesday, which was key. So for the overall market, if you zoom out now, you can see overall structure starting to slow down here. We actually recently broke underneath your key level of structure here, which was yesterday. We ended up using this as a retest level here in the after hours. So you can see price had a nice bounce right off our 6680s. Came back up, retested our Tuesday's lows, and now we're continuing to push towards the downside. Also, we're now underneath this earnings low, which is our 6680. So you can see this is going to be the key level moving forward. It's also your, earnings low, it's your FOMC high. You can see multiple touches here, levels of support. Now for the overall markets, we'd like to see this level be used as resistance, which is your 6680 for continuation. Now all the way back down in towards that 6650 and potentially that 6610 here on the higher time frame. So this is going to be the key levels that we're keeping an eye on moving forward here for the ES. The only way I'm interested in upside now is if it could have a very strong reclaim. If we could reclaim back above your 6680, I'll be a little bit interested in a push back higher, but ultimately now the key level, as I mentioned, is going to be that FOMC high. If we maintain underneath that FOMC high, I'm going to lean a little bit more towards the downside now. We're also underneath their previous day lows here as well. So the reclaim would be necessary and it would have to get back above that FOMC high. If we maintain underneath this level, now I'm going to lean more towards the downside and be looking for a potential pop and fade in the overall market. So that's what I have for the ES coming into market open. If you go into the SPY chart, fairly similar thing here. The key levels that we're now going to have marked out is going to be that FOMC high 660 along with your previous day lows, which is your 660s as well. So for the ES, In the SPY chart, key levels that we had marked out yesterday, 664, kind of rejections right off the bat. Once we got underneath that, you can see kind of rejection staying heavy. And once we broke underneath this key level, which was our 662, we had a lot more downside underneath this key level, and we ended up pushing all the way back down in towards that 660. So for the overall markets here now, nice kind of retest in the after hours off of our 662. You can see a nice push towards the downside here in the pre-market. Now that we're underneath your previous day lows and also underneath that FOMC high, what I like to see now is really maintain underneath 660 if markets are going to continue lower down in towards 655 and below. So what I like to see is a reaction coming into today off our 660 previous day lows. That's going to be the key level coming to market open. If we reclaim, as I mentioned, I'll be somewhat interested in this long, but now longs are going to be a little bit more difficult, specifically on the SPY, just because it is lagging behind. But if you can reclaim, you could be looking for the 660 reclaim for a pushback towards the upside. Key level is going to be 662, but as you can see, right, coming right off the bat, we're going to keep an eye out on that 660 pop and fade here for the SPY. So keep an eye out on your key levels coming to market open. As for the NQ, let's just zoom out and go on to the 1 hour chart. So key levels that we have marked out is number one, our 24,880s, which was yesterday. And then we also had your Tuesday's lows marked out, which happened to be used as resistance, 24,800 for this continued pushback towards the downside. So as you can see here, nice push towards the downside yesterday. We finally broke structure here as well later into the day. And now you can see the first kind of pop is being shorted. And now we're underneath key levels. So key levels that I have marked out is your previous day lows in this 24,640. You can see for the NQ, it's a little bit stronger than the ES. ES is underneath this FOMC high, whereas the NQ is still above it. So if you're going to be looking for shorts, you primarily look to short the SPY instead of the Qs, just because that one is relatively weak. If we're now on the 15-minute chart, you can see once we got back underneath your Tuesday's lows, we end up having a really solid push towards the downside. So you can see retesting here in the after hours, and now we end up having this nice push coming into pre-market. Key levels today is going to be this 24,640. If we reject off this level, we could potentially see some more downside here in the overall markets off that 24,640. If we reclaim, then we're going to see this miniature bounce back in between yesterday's range that we have. So for longs, right, you could be looking for this reclaim. It's going to be a lot more trickier, and I don't expect it to have a V-shaped recovery, but key level is this 24,640. If you reject right off the bat, we could be looking for the previous day low retest along with our higher time frame key level retest as well for this continued pushback towards the downside. So those are the key levels that I have marked out for the ES and NQ. As for the QQQ, key levels that we're going to have marked out is this 594. We can change this color here now as well. Key level is 594, which also happens to be your previous day lows. Other levels that we can have marked out now is really going to be back in towards your FOMC highs. So we can draw this out. As you can see, we also have this gap as well. So this is also a possibility that we can see this fill back towards the downside. But for the QQQ coming into today, what I'd like to see is a reaction that we have off of your previous day lows. If you reject off your previous day lows, 594, we can see a pushback down in towards your FOMC highs, which is also key level support 591s. So this is a possible scenario here for the QQQ. Reject off that previous day lows. If we reclaim back above your previous day lows and base, we can see a mini mean reversion kind of back in between yesterday's range, which will be your 595. Upside, it's going to be a little bit more difficult, but we can keep an eye out on the reclaim of your previous day highs. Now I'd much rather see kind of this pop and fade off a key level for this gap fill back towards the downside. So 591 along with your 594 is going to be key coming to market open here on the major indices. Now let's go on to some of the tech names that we have coming into today with the overall markets pulling back here as well. I'm less interested in upside. Most of these names are pulling back. There's only a specific handful of tickers that are still holding up on this market pullback. But let's first talk about Tesla. So for this one you can see is still holding up compared to the overall markets, right? QQQ pulling back the last couple of sessions. Tesla's really the only ticker that's been holding up. You can see these higher lows have been being built here as well. So this is the only one that has relative strength and is continuing higher. Key levels that we have marked out is our 445. So this is our this week's highs. This is Tuesday's highs. And you can see this is also basically our previous day highs here as well. So for Tesla, really what we can just have marked out is our past few days worth of price action. Now for some upside, what you like to see is really the reclaim back above your 445 and also the reclaim back above your 440. So if you want to see some upside, right, you like to see higher lows being built, reclaim back above 440, base above that for continuation towards the upside. Or now the next best opportunity is going to be above your 445, which in this case is your Tuesdays and previous day highs for continuation. So Tesla is really the only ticker that I'm interested in for upside. At this very moment, I'm more neutral on this ticker just because the Qs is dropping. So for it to set up, it's going to have to reclaim back above key levels and base above key levels here as well. So those are the levels I have for Tesla. This one's still on the higher time frames, very bullish. Higher time frame hasn't had any significant pullback. I would be a little bit interested in Tesla shorts only if we can get back underneath. Really, the key level I have is all the way back towards really 430. So until we're able to break below key levels, which will be your previous day lows, I'm not interested in shorts, right? Tesla's one of the strongest names. Until it shows weakness, just be looking for major dips to look for longs towards the upside. As for AMD and the rest of the tickers, let's actually just go into NVIDIA first. So NVIDIA key levels that I have marked out is your 184. This one's just coming right back inside the range. So as you can see here, just based off of the daily chart, rejection off of your all-time highs. And now we're just coming right back in the range. So really not too much to talk about here on this name. It's really been in consolidation for the better part of the past 3 months here, especially on the daily time frame. So the rest of the time frames are going to be in consolidation as well. Recently hit your all-time highs on Tuesday, and then you can see nice little rejection. Now we're back right in between the middle of the range. So I'd be very cautious. We also just gave up the gains that we had after this big news event. So now for NVIDIA, key levels, we can actually just get rid of this. Key levels that we're going to have moving forward is just going to be your 178. We can also mark out now key levels is basically your low that we created here once we had that big pop. So we can just draw this level, previous day lows. I like this one, which also is in combination with the day that we end up having this big push higher. So for NVIDIA, key levels that I have marked out 175 along with this 178. So if you want to see some more downside here on NVIDIA, number one, kind of pop and fade off your 178, hold underneath this level for potential move towards the downside, which will be your 173. Another scenario, if it bounces above, right, once it gets back underneath, you could be looking for some more downside on this ticker here as well. So those are the levels I have for NVIDIA. Only way I'm interested in upside here, potential kind of mean reversion if it can reclaim back above your previous day lows, or now it's really going to be the break back above this 178 for this continued push back towards upside. Obviously, this is out of the picture. So the only trade that you'd be looking for potentially, it would be the reclaim back above your previous day lows. And I don't really like these setups as much. You'll see a lot of these tickers, if you want to see some upside, it has to be the reclaim back above your previous day lows, especially if it's weaker like this, not as interested. I'd much rather look for the previous day high break and retest. Where the reclaim isn't as strong, especially if you are now in more neutral stance or you have a downtrend on some of these tickers. So that's what I have for NVIDIA. We're going to be open and playing both sides coming into today. As for AMD, key levels that we have marked out end up rejecting off our higher time frame key pivot level, but AMD was one of my main watches coming to yesterday. Never ended up taking this to the upside just because of the overall context. But for AMD, you can see higher time frames just kind of came up, wasn't able to close above your 162, kind of came up into this 164, and now we're kind of just rejecting off this key pivot point. This, in my opinion, looks like it's consolidating a lot more here now as well. I wanted to see the close above, or I want to see kind of this like flat top break above, continuation higher, ultimately wicked above, no continuation, and now we're right back inside of the middle of the range. So for AMD, Not too much to talk about here. Rejection. Now we're breaking underneath key levels here as well. So next levels towards the downside underneath your previous day lows is going to be all the way back down in towards that 155. So a few scenarios here for AMD: break underneath previous day lows, continuation down in towards that 156, potential pop and fade off your 160 for this continued pushback towards the downside here as well. Only way I'm interested in longs, I'm not really interested in longs here on AMD, would be the reclaim back above your 160. Really, this is off the table for me, but key levels, right, just keep an eye out on your 160 here for AMD. As for Apple, this one, key levels that we have marked out is your 254. And you can see nice break, kind of just showing weakness right off the bat yesterday. Key levels that we have marked out is our Tuesday's lows. We also have key levels here as well. You can see broke underneath it yesterday, and now we're coming back to retest this level here in the pre-market. And you can see some sellers kind of stepping in. So you can see rejection off this level. Next level is going to be your previous day low here as well. So what we can have marked out is our 254, which is our Tuesday's lows, and now we can also have marked out our previous day lows here, which is our 251. So what we like to see coming into today is really the reaction that we have off of these two levels. As for Apple, there's a few scenarios we could be looking for, right? Kind of this pop and fade off this 254 for continuation back towards the downside, or now it's going to be underneath your previous day lows, 251, for this continued push back down in towards, right, 250 and below. So this is what it looks like here for downside. I really like underneath previous day lows if it wants to continue to show weakness. So this is for the downside here on Apple. I'm still fairly bullish here actually on the higher time frame. So what I'd like to see for some more upside moving forward is either the bounce reclaim back above your 250, or it'd be the break above your 254 for continuation. So for Apple, at least on the higher time frames, I'd be cautious of shorting this one just because we are very close to our all-time highs. So what I would like to see is kind of just this base on Apple around this 250. And once we're able to reclaim back above your 254 later, I'd be interested in trading this back towards the upside. So for Apple, we'll keep an eye out on this one in the next coming days for eventually at that push back up and towards your all-time highs. As for a few other tickers here, Meta, not too much to talk about. So a lot of these names are pulling back, at least specifically the Qs. Some of these names aren't really doing too much that originally had some relative weakness. So for something like Meta, not too much to talk about, not really dropping with the overall markets. Key levels that we have, really 770 along with this 740, 750. As for Google, this one's pulling back just a little bit here now as well. Key levels that we have marked out is your 248. We also have this 250, 250, 250. Key levels we can also mark out now is going to be your previous day low. So for Google, this one showing a little bit more weakness now. Key levels all the way back down in towards that 242. If Google wants to stay heavy, kind of maintain underneath your 246 for continuation lower, or if we can get that pop all the way back up in towards that 248, you can be looking for a fade off that level down in towards that 242 here on the higher time frames. As for Amazon, this is the one that's been showing relative weakness. So Amazon's one of my names to look out for, especially this one's been showing weakness. We have some bearish news here as well. Key level is going to be this 221 major level of support. You can see how many touches we've had off this level. Multiple touches here on Amazon. So if you can break underneath, hold underneath, Amazon's going to be one of my main watches for continuation lower. So the key levels for Amazon coming into today, you can see kind of nice pop and fade yesterday right off the bat. Key levels is going to be your 220. So what we can have marked out here, we can have a few levels. Number one, we can mark out this after this initial drop towards the downside. Now we can also have marked out, it's going to be that previous day lows. So we can drag this over here as well. So for Amazon, we have our 221.50. Also your previous day lows, 219.50s. So for Amazon, either the break underneath right off the bat, you could be looking for a continuation lower. Another scenario here as well is the retest all the way back off our 221.50. You'd be looking for the break back underneath that 219.50. So this is what we have for Amazon coming to market open. You're either going to be looking for pop and fade or break underneath your previous day low retest right off the bat. So this is what I have for Amazon. So you can keep an eye on this one coming to market open. And then for the rest of the tickers, Netflix, Not too much to talk about in this case. And then, of course, for Microsoft, this one's consolidating here as well. So, not too much to talk about on this ticker as well. So, now let's go on to a few other tickers that we do have. If you guys do have any charts or any tickers you'd like me to go over now, I'll go over them for the next 10 minutes until we have some red folder news that is at 8:30. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the daily watch list, that one's in the description, of course. If you guys haven't joined the waitlist for the event that is coming up at the end of the month, you guys can join that one as well. Okay, let me grab some water here. If you guys do have any charts, you guys can drop them in the chat now. Okay. What's up, everyone? Hope you guys are doing well. Let's go over some of these names here now. Palantir. So Palantir, this one, another rejection cut off our key level, which is at 184. This is the level that we need to see price get above if we want to see continuation higher, rejection, and now we're back down in towards key levels of support, which is that 178. Currently, we're actually breaking underneath this level. So you can see on the 1 hour time frame, was not able to break above 184. Key level support 178, now breaking underneath here in the pre-market. So what you like to see here for Palantir is kind of this key level support 172. If you want to see some downside, potential kind of pop and fade off your 178. I don't really like this as much since I'm higher time frame bullish here on Palantir. What I personally like to see is either the dip all the way back down and towards that 172. You could be looking for the bounce off this level. Or now be the reclaim back above your 178. You could be looking for your 178 reclaim, which is your previous day lows for this potential pushback towards the upside. But for Palantir coming to market open, just mark out your previous day lows. And you could be using that for the reaction. We can actually just refine this. So previous day lows 177. This is going to be a key level here for Palantir. As for SoFi, this one starting to show a little bit of top signals, key levels that we have marked out. It's still going to be your previous all-time high. So 2840s is really the level I'd like to see hold. We're expecting a little bit of sellers to step in after having really a straight push towards your all-time highs. You can see this one, some profit taking kind of at this all-time highs level. Now what I like to see is really the reaction that we have off our key level support, which is going to be all the way back down, actually in towards, it's going to be our 2650. So for SoFi, I wouldn't be surprised if we have a little bit of a bigger pullback coming to market open. Key levels that we have is your 27 and all the way down in towards that 2650. So those are the levels I have on on SoFi. As for Oracle, this one's pulling back here as well. Key levels that we have marked out is that 306 along with our 308. This one starting to slow down just a little bit. It is eventually going to form this downtrend. So what I'd like to see is it maintain above your 290. If we can maintain above your 290, we can see kind of this push back up in towards the upside. Or if it could reclaim back above 308, it would show a little bit of strength here as well. But for Oracle, levels that you're going to have marked out today, previous day lows. So keep this in mind, 300 key psych level here as well. Reclaim, we can see a push back up and towards your 306. Rejection, possibility that we could see your 294 here on Oracle. As for TSM, this one, really strong push towards the upside. We hit your all-time highs, end up having a gap a couple of days ago. Now we're coming back down in towards that 276 and also your previous day close from this level here as well. So coming into today, keep an eye out on your 276, maintain underneath 276. You can see some more downside. If you can reclaim back above 276, you can potentially see a push back up and towards your previous day lows, along with your previous day close 280 here on TSM. As for BABA, this is another one where nice consolidation. We had some news, gap up. And now you can see, right, more consolidation here. So whenever BABA has these huge gap ups, it usually just likes to consolidate. So key levels that we have marked out on BABA now is just going to be your previous day lows, along with your previous day high. So we can just kind of draw this major key level. So previous day, so we have your previous day lows marked out. We also have your previous day highs marked out here as well, 180. What you like to see is the reaction that you have off of this level, 175. If you can maintain underneath 175 right off the bat, potential continuation lower. If we reclaim, show some strength, then we're just going to come right back in between yesterday's range that we have marked out. So that's what we have for BABA coming into market open. As for a few other tickers, open, this one's been pushing towards the downside, but so far buyers are stepping in right off our key level that we mentioned yesterday, which was our 713. So this is a higher time frame key level. I talked about this one. Buyers basically have to defend this level here. You see so far a nice kind of push back higher. So right, reclaim, hold above your 720, and now we're pushing nicely back towards the upside. If you're looking at this on the 1 hour chart, right, nice kind of base and break above this level. Key level that you're going to have to see reclaim now here as well is above your 870. You like to see this 870 hold for this pushback towards the upside, right? Kind of this inverse potential head and shoulders. If you can get above your 850, hold above your 850, we could see this nice continued push back up and towards 1050. If it gets back underneath, there is a possibility we could see some weakness. If we just kind of show some weakness right off the bat, it could very much well fade off this level and come back in between yesterday's range. So that's what we have for open. We have about 2 minutes until we have 2 minutes until unemployment and other numbers here as well. So I'll go over a couple more tickers. As for IWM, key levels that we have is your previous all-time high. So if we go onto this daily chart, key level, as you can see here, previous all-time highs. So it's breaking back underneath. Also breaking underneath your FOMC high here as well. So this one's showing a little bit more weakness now. Key levels on the higher time frames is your 239.50s. And we can also mark out our previous day lows. So for IWM, kind of pop and fade is in play for a push back down in towards your 239.50s. Okay, let's see. Let's go on to a few other tickers here, pre numbers that we have. As for hood, we can just kind of remove a bunch of these levels. Most of them don't really matter. But for hood, key levels that we have on the higher time frames is our 128, which is our Tuesday's highs. Other levels that we can have marked out now here as well is just your previous day lows, 125. And then other levels towards the downside is, if you go into the hourly chart, just basically this key level support 123, higher time frame key level as well. So for hood, this one's been consolidating a little bit more, very slow price action the past few weeks ever since hitting all-time highs. As for hood, keep an eye out on your previous day lows here. Potential pop and fade is in play off your previous day lows for continuation lower. For bounces, right, you could be looking for the 123 bounce, or it's going to be the reclaim back above your previous day lows, 125. So that's what we have for hood coming into today. As for OKLO, key levels, you can see OKLO is kind of pulling back here in the pre-market as well. I'm not sure if we do have some news, but ever since having this really explosive move towards all-time highs, it was a given that this one was going to eventually have a pullback. This one's having a little bit of a sharper pullback here now underneath your previous day lows. Key levels is actually your 110. So this is basically the area that we broke out from. Now you can see OKLO right back in towards this key level. So not too much to talk about on this ticker. We also just had some numbers that came out here as well. It doesn't seem like it really affected the market. So as you can see here, we just had some unemployment claims, and we also had final GDP numbers here as well. So unemployment came in a little bit lower than expected, 218 compared to the forecasted, which was 233. As for final GDP numbers, came in a little bit higher, which was your 3.8% compared to 3.3, which was forecasted. So for the overall markets, now we'll kind of develop our game plan coming into today. So as you can see here for the ES and NQ, my key levels is your previous day lows. So if you can get that previous day low retest coming into market open, that would be good for a potential pop and fade coming into today, right? Off that previous day lows. Similar thing here to the NQ. We'll keep an eye out on this here as well for a potential kind of pop and fade off your previous day lows. Key level, as you can see, it's actually rejecting off this level here in the pre-market. So we'll keep that in mind. As for the SPY, a little bit weaker than the QQQ, but key level is going to be the 660. And then for the QQQ, you can see a little bit of rejection off that previous day lows, which is that 594. So those are the levels I have coming to market open. We're going to keep an eye out on your previous day lows. I'm open to playing both ways. So I'm open to playing both sides. If we reject off your previous day lows, I'll be looking for a pop and fade. If we reclaim back above your previous day lows, I wouldn't be opposed to looking for a potential mean reversion back up and towards your previous day close. As for my main watches coming into today, I really don't have too many main watches. It's going to be based off of intraday price action. As for Tesla, this one's still holding up. So interested in this one. Higher lows are still being built here on the higher time frames as well. So keep an eye out for your reclaim of your 440 or the potential bounce off your 430. And then for the rest of the tickers, AMD, key levels that we have is your 158.50s. As for Apple, key levels that we have 254 along with this 251. Nvidia, key levels that we have is your previous day low. So keep an eye on Nvidia coming to market open underneath your previous day lows, underneath your low that we, the low that we created after this really big push up with news. If you get underneath and hold underneath, we can see some more downside here on Nvidia. So this is going to be one of my main ones for potential move lower coming to market open. As for the rest of the tickers, as I mentioned, it's primarily going to be based off of intraday price action. I do like Amazon here as well, just based off the higher time frames. If you can break underneath this key level support, which we have, which is that 220, potentially we can see some more downside here as well. So that's what we have for Amazon coming into today. And then for the rest of the tickers, more neutral. Google potentially could see a key level support here as well. So those are my main names coming to market open. I'm primarily going to be focusing on the indices themselves, and I'll keep an eye out on Tesla along with Nvidia and Amazon for some downside. Let me go into a few other names here as well. Before I get ready for market open here. We'll receive an email if I get to watch your class this weekend, or can anyone join the class who signed up? Yeah, you guys should receive an email to sign up yesterday. If you haven't received it, you should receive it, but we sent out emails yesterday, some emails from Tony to sign up for the webinar. So make sure to do that. You should have received some emails. If you haven't, don't re-sign up, because that usually flags the system if you sign up once again. So if you sign up once, don't sign up again, because a lot of times they'll flag it as spam. So make sure, if you haven't received emails, we'll send out some more emails as well. Okay. As for Intel key levels, we had some news yesterday, end up having this nice push higher once we broke above our 30 key psych level, which as you can see here, which was that high that we created from Tuesday along with Monday. Nice kind of previous resistance turned into support for this continuation higher. End up having this nice push here on Intel back up and towards the key level. So for Intel coming to today, this one, levels that you're going to have marked out is going to be your previous day highs. So previous day highs is going to be key here along with this 3180. So what you like to see on Intel coming to today is the levels that we have. If you can maintain above your 3160s, we can see a push higher. If we break back underneath, we're going to see this push back towards the downside. So that's what we have for Palantir coming into today. For some other tickers, let's go over gold. This one should be pushing towards your all-time highs. Let's take a look at this. So for gold, this one ended up having this push up and towards our previous level of support. Now you can see is being used here as resistance. We have multiple touches. Now you can see kind of rejecting off this 37.56. So for gold, this one kind of rejecting off a very key level. What we now like to see is either one of two things, kind of pop and fade, which is currently happening for a pushback towards the downside. Or if we want to see some bullish price action here on gold, reclaim back above 37.56 for this potential pushback towards the upside. As for a few other tickers here now, RGTI. This one, really solid push towards the upside here as well. Kind of basing, really solid move along with OKLO. Now this one's pulling back just a little bit. Key levels that we're going to have marked out is just key levels of support. So in this case, what we can have marked out is going to be this day, which I would mark out 29, which is in this case your Mondays along with last week's highs, Tuesday's lows. So very key level here on the higher time frames. you like to see buyers step in off your 29 for this continuation higher. If we consolidate, get underneath your 29, potentially you can see some more downside later into the session if you get underneath. But overall, higher time frame, still fairly bullish on this ticker. Okay, yeah, you should receive one. Make sure to check out my email for the seminar came in. Yeah, check your spam folder as well. Sometimes that's the case. Let's see. Let me go over a few more tickers here and then I will get ready for market open. As for UNH, this one, nice kind of pop yesterday in the pre-market, but ultimately kind of rejected off key levels yesterday. And now this one's just consolidating. But levels that we have marked out is your 352. We really want to see now the reclaim back above 352 for potential continued pushback towards the upside. As for a few other tickers here as well, yeah, really not too much to talk about. A couple names kind of dropping here. So we're going to be a lot more open and playing both sides. Just mark out key levels being your previous day lows. And then as I mentioned, keep an eye out on the Qs and SPY coming to today. Key levels is going to be that previous day low. So if you can get that pop coming to market open, we could be looking for the pop and fade. If we just drop right off the bat, we're going to be a little bit more cautious of looking to short right off the bat because we'd have to be looking for some sort of pop to short towards the downside. So that's what we have for the major indices, SPY and Qs. Keep an eye on your 660, and then for the QQQ 594. As for my main watches coming to market open, as I mentioned, keep an eye out on Tesla 433 along with this 440. A lot more neutral on this name. Of course, higher time frame still fairly bullish, but intraday and at least this week's price action a little bit more neutral. As for downside, I do like Nvidia underneath your previous day lows, underneath this 175.50s. As for Amazon, keep an eye on this one here as well, underneath your previous day lows, 219.60s for potential continuation. So that's what I have for some downside. And then for the rest of the tickers, Apple, keep an eye out on your 253 along with this 251. And then even AMD, if you can get underneath that previous day lows, potentially you can see some more downside here as well. So keep an eye out on your 158.50. But yeah, that is going to be it for me today. At least for the overall markets, we'll just wait for the first kind of 15 to 30 minutes to play out. To see the price action come to market open. We are now flipping bearish, at least this week's worth of price action. Higher time frame, of course, is still bullish, but the 15 minutes flipping, the 1 hour is flipping here as well. So we're now more neutral. We could be looking for shorts as well underneath key levels. But yeah, that's what we have coming to market open. I'm gonna get ready for market open here now. So if you guys did enjoy that, appreciate if you guys drop me a like and sub. If you guys haven't joined the daily watches, of course that's in the description. And if you guys haven't joined the waitlist for the webinar, we have sent out some emails. So make sure to check your spam folders as well. That is going to be this weekend on the 28th. So make sure if you haven't signed up for that, that's going to be a 3-day event. That one's also in the description as well. So yeah, that's going to be it for me today. And I will see you guys all tomorrow morning. All right. Take care, everyone. Have a great rest of the day. Peace.